for Wednesday, the 5th of February, 2020. Yesterday was a big day for global equity markets as the bounce back from Friday's morning continued. Today we'll begin with a similar emphasis with help from some positive headlines on treatment of the coronavirus. The World Health Authority later tried to dampen expectations about a potential cure, but the tone was set. Add to that President Trump's State of the Union speech from last night, and markets were happy to continue with a positive bias. Or maybe the debacle of vote counting at the Democratic Party caucuses in Iowa was enough to put a smile on investors' faces. Regardless of the catalyst, Asian equities would start the ball rolling with the Nikkei and Shanghai indexes both up over 1%. Europe will then take over, where the DAX enjoyed gains of almost 1.5%. What coronavirus, I hear you say. FX could be best categorized as a day for US dollar strength, with euro dollar dropping below 110 and testing the support between 109.80 and 109.90. Sterling against the dollar also moved lower, but only after a squeeze higher on better than expected services PMI data. A high of 130.70 would soon become a low of 129.57 before recovering to 130, the figure at the New York close. As usual, sterling never does anything the easy way. Dollar yen, meanwhile, would steadily rally to close at its highs around 109.84, having started the day near a 109.40. And US equities would follow on from Europe, although a sharp sell-off in Tesla shares had the Nasdaq lagging the Dow Jones and S&P. In the end, the Dow Jones will close up a whopping 483 points, or 1.68%. The S&P would make a new high, ending the day up 1.13%. The Nasdaq closed higher, but just shy of 0.5%, despite Tesla's reversal of yesterday's spectacular gains. Gold was the only real head-scratcher of the day, with equities higher along with the dollar. You might have expected the yellow mackerel to have continued his path lower, but several attempts to trade under 1550 were repelled and ended the day at 1557. The volatility over the past week has been quite something. Common sense has at times been absent. It seems like only a few days ago we were testing euro-dollar support under 110, and that's because it was only a few days ago. The squeeze to 110.95 might have had many thinking it will be a while before we retested the 110 level, but not so. In fact, the speed at which we have returned does rather have me thinking we will get a proper test this time. So back to this hourly chart here in euro-dollar, just to remind ourselves of the setup. 109.90 held last time, 109.94 held today. But it's what us older traders would refer to as a dead cat bounce. So I would suggest 109.80 is the rule level to watch here, but you get the picture. You have US non-farm payroll data on Friday after extremely strong ADP data today. Things could get interesting. But as always, plenty of ways to play it. Your choice how to do it. Hope you had a good day. Talk to you tomorrow. Cheers.